What is the one thing that you do before you go to the grocery store? Well, hopefully what you do is you create a budget and a shopping list. Those two things are essential before you go to the grocery store, or else you're just going to go into that store and pick out whatever looks good at the time, right? Well, that directly correlates to searching for a home. You've already done the work to find a serious real estate agent who is going to be diligent in following up and negotiating for you and getting all of the details, right? Asking all the questions of the seller's agent, the listing agent, and making sure that you know exactly what you're up against when it comes to the preferences of the seller and also how many agents have come through, the activity. You've done all that groundwork. Well, none of that actually matters unless you have found the criteria, the shopping list that you're looking for, and you know what kind of home you're looking for. What are the needs? What are the pains that you are going through in your life that are making you want to go and get another home? You may need more space, or you may need more of a backyard, or you may need different architecture. You may need more rooms. All of those things are very important before you start looking for a home. But there's one thing that's even more important than those two, and that is pre-approval. If your agent doesn't know your budget, if you don't know your budget for a home and you don't know what you're pre-approved for by a lender to purchase a home, then it is going to be very difficult for you to narrow down what you can actually look at and what you are interested in purchasing. Maybe you have your eye on this really beautiful $1 million cottage and you see that the mortgage payment's $6,000 on a payment calculator online. Well, that's helpful, but it's not helpful unless you know that a lender sees your different variations, your different variables of your application to qualify you to purchase that home. So that's what we're going to talk about today. My name is Alex Stoeber, and in this video, we're going to talk about pre-approvals and underwriting and how you can make the best out of that process, get the best pre-approval and make it a streamlined experience for you. Let's get into it. The first thing that you need when you're looking to get a pre-approval is, well, first you need to understand what's happening with a pre-approval. Essentially, what's happening in a pre-approval process is that the lender that you are choosing to find your loan and get an investor to invest in your loan, that lender is going to ask you for, well, three things: an application, your financial statements, and a credit score. Those are the basics for how they do it. And I know that there are elves behind the scenes making everything happen and deciding who is getting a loan and who is not getting a loan. And yet, what you should know is that the application is incredibly important. The application is the first step because it gives them your information, and it also gives them the idea of your employment history to make sure that you've had a job for a certain amount of time and they can track your income. They're going to be pretty concerned if you have a history of gaps in employment, right? Because that means that the mortgage is at risk and there's a danger. So you may see a higher interest rate because of that. Or if they see that, for example, you've had a decreasing salary, a decreasing income, that's going to be a red flag for them as well. So that's something to keep in mind. Start with that application process right away because there is nothing, it doesn't cost anything to actually get the application process started. And even if you are 3, 6, 12 or more months out, getting started on that application gives your lender a place to talk to you about your financial picture and also what you are pre-approved for. So if you know your number and you have a goal to increase that number, then your lender actually acts as a coach to talk to you about the aspects of your application that would get in your way of getting to that number. So maybe you need to ask for more promotions or raises. I mean, everyone should do that, right? We all work so hard. You also may need to work on your credit score and pay down credit cards, for example. These are all aspects of what you should be doing in order to increase your ability to purchase a bigger home. And also, that's a good way to just create a more sound financial picture as well. The second thing you need to do is provide financial statements showing that you have the cash on hand in order to pay the 3% deposit when we do get your offer accepted. Within 3 days of when we get your offer accepted, that's actually when you have to put down 3% of the purchase price as an earnest money deposit. The earnest money deposit, or EMD, is the seller's way of seeing that you are putting your money where your mouth is, that you are giving good faith, that you're going to be doing inspections and you're having the intention to close. If there are 5 offers on a property and a seller sees that one person's offering a 1% deposit within the first 3 days of accepting the offer, and the other person's offering 3% deposit, that 1% is going to be very suspect. With my sellers, we are diligent about seeing those red flags on an application, because if you say yes to the 1% and then they end up pulling out, or they end up pulling something in escrow that compromises the deal, well, then that 3% person who may have had a similar offer is now looking at other properties, and you may potentially miss out on them. That is why it's always important for you to provide your financial statements to your lender and show them that you have the proof of funds. The proof of funds means that you have the money in escrow in order to pay your deposit as well as your down payment. The down payment could be 5%, could be 10%, could be 20%. I've seen people put down 80% of the loan and get a 20% loan. Those are all factors that the lender has to take into account in order to determine your interest rate, or the risk factors and the risk return benefit, the risk versus return of actually lending you that loan. The third thing that all lenders are going to need is a rough idea of your credit score. So that could be your Equifax printout statement, could be Credit Karma, some way that they can determine what your credit score is to determine how likely you are to pay back that loan over the duration of it. So if it's a 15-year loan, if it's a 10-year ARM, an adjustable rate mortgage, or a 30-year loan, then they want to make sure that you have a past of actually repaying your debts. Those are the 3 things that you need to focus on as soon as possible when you're looking for a home, because that determines what your shopping list actually can look like. You're not going to be looking for a ocean view in Santa Barbara if you can't qualify for $1 million loan. You probably need a $2 million loan, honestly. So that's going to determine your compromises, right? If you can only afford a $450,000 home, then we're not going to be looking at single-family homes in Santa Barbara. So that's something to keep in mind. It determines your shopping list, and those 3 factors, your application, your financial statements, and your credit score, also determine what your budget is and what we're going to be able to get for you. So reverse engineer what you're looking for. Go find your lender. Tell them that you want to be pre-approved for a loan. Submit your applications, submit your documents, and let's get shopping. Let's go.